Good morning, traders, and a happy Friday out there to everyone. Hope that y'all had a good evening there in store, and everyone having a nice holiday week, a holiday Christmas, and all of that good fun there. And with that, here we'll be kind of finishing off our week here today. So of course we have our Friday to take into account. However, we already had our expiration cycle there last week, so not a huge significant expiration cycle there for us today. And as far as our economic calendar for our purposes, also relatively light out there. We have our good trades balance and preliminary wholesale inventories at 8:30, both of which aren't too large of a significant data points. And then we do have, however, natural gas and crude oil figures, just due to the fact that we had the holidays there earlier on in the week. So we'll take those line items into account, and pretty much with that said, we'll be able to hop right on in here to our daily charts, just so we note as to what we'll have coming into the session here today. As of the moment, sitting, inside the previous day's tail, right, previous day's bar, but sitting inside the tail area, a reasonable previous day's range, the 6107.50 to 60.63 and a quarter. So playing inside the previous day's range quite well. As we know, we were doing a pretty well repair job in terms of coming back up to our big impulse bar down that we had, almost coming back fully into the range. So as of the moment, of course, the previous day's low is going to be an important area to have on the sheets there. Again, that's that 63 and a quarter, which we can also kind of get a visual for on the intraday basis as well. But not too bad of a view. We did put in one pause bar on the daily charts there yesterday, whilst still making a higher high first. So we had that going for us, and just kind of consolidating loosely. We would also note that not that it would be a huge factor, the 5 SMA daily, but we do have it coming in relatively close to our previous day's low. Right, our PD low and the 5 SMA coming in fairly close to each other, so we'll have that to take into account. But not too much else shifting in terms of the daily composition. Big bar down, our prolonged period trying to work ourselves back up from the damage that was done, and just kind of formed ourselves a little bit of a tail during yesterday's trading. So the daily charts give us one piece of that equation. Where we start to get more detailed would be coming in here to like the intraday charts, such as like a 120 minute or a 240 minute display. And a couple things here. One, again, really shows the nature of how we had the large impulse bar to the downside. So we can certainly give them credit for making their way back above the 60.50, or call it 60.51, right? Because that took us a good amount of effort. That was the previous spike high tail we had left along the way. So we were able to get on the other side of it, and we've been kind of doing an all right job on maintaining. Obviously, as we know, we've been up against this big bar down, however, so it's taken us, a lot of effort, if we would. Noting our oscillator composition, we've come up in a two-part wave, right? So it gives us that M shape on the oscillator. However, we're kind of coming back through the middle of the range, so to be treated slightly different than what would be our traditional divergence, right, or loss of momentum, which we had a bit more so on the bottom of the swing. So as of the moment, viewing this as a two-part wave up on the 240-minute chart, or that feeling of the ABC up. So again, as we come in here and do a little consolidation, between that previous day's low and 60.50, those are all kind of areas of interest, that are a little further down below. Those would be kind of viewed as caution areas there for our index futures there, in particular with the ES. So outside of that, though, not too shabby for themselves. A reasonable developments in the overnight session. So as we get closer towards the opening, we'll bear in mind if we have any, but as of the moment, wouldn't be a huge concern. But any gaps, pit session gap areas on the opening, but seeing that we're inside the previous day's range at the moment, that wouldn't be a huge concern for us. But do like those 240-minute charts to carry forward. Kind of going through that positive consolidation phase. We're kind of coming down towards the moving average, whilst the slow line's still working on correcting. So not too shabby there for the development there in the E-minis. And then hopping on over here to our DAX feature, our next one into the group. A little bit different with the DAX. We know the DAX has been working a little bit more so with the closing still on one side of the 5 SMA. So we have that aspect still to be aware of there in terms of our set of three. and then 6 on the close there yesterday. So today will be an important day for the DAX, in that if we close beneath it again there today, we'd be kind of giving ourselves that feeling of another extended run taking place to the downside. So to have on the sheets here today, we're looking at 2125 there as being that 5 SMA there for the DAX. And we can always replicate this, taking that same 2125 and bringing that over here on the intraday charts as well. That way we can see what that visual looks like as we go through motions there. Very close, I would say, to the top of our previous impulse bar that we had here from the trading that was done during the first couple trading days of the month of December. So blue cyan line there is just to replicate what we have here on the daily charts. Seeing that we've been closing beneath it for 6 days, that's what will make it a value there today. Coming out of course, a little bit of an inside range bar yesterday. So we'll keep an eye on it, right? If they do proceed to get better range expansion, that it is something that can be sustained since they're coming out of that inside range bar that we built out yesterday for that of the DAX. Alright, and then moving on along here, we have our currency groups to take into account here as well. EC, of course, being a tad more on the contain side. As we know, we've been trading inside of our large impulse bar from the 18th trading. It's taken us quite a lot of time building out that one particular bar, so we did poke beneath it and everything, but the majority of the trading has taken place inside of the bar. So what we do have, it's a little bit more apparent on the intraday charts, would be this previous cycle high, 1.04875. That was where we had good selling pressure in that of the euro currency. We came back up for reasonable counter-reactive lift, and I have that marked with just a dashed line because, as we'll see right on the other side of that zone there, we didn't spend a whole lot of time developing that area, so viewing that as being a little bit of structural work or later developed areas that loom up above there still in the case of the euro currency. So if we were to do any type of work on the other side of 48.75, we still have pretty good overhead that we'd be running into there for that of our euro currency. So that's the display there, taking that daily in conjunction with the intraday. We came in, we were trying to put in some degree of a higher low. We have one higher low, but that higher high element obviously still remains pending. So they're keeping it contained, though, as of the current time being there in that of our euro currency, the EC, right? And then we can always look at the dollar index and such as the day progresses on as well. But for now, we'll have the gold next into the view. The gold, a couple things. We know we had built out that prolonged previous trading range, right? And we were kind of working on slicing and dicing, moving out from it, coming back through it, and then retesting from underneath. And it has been serving as good overhead for that of the gold, right? So coming into the session here today, it does seem as if they had a reasonable showing yesterday. Right? They tried to come out of our little consolidation phase, whilst also trying to put in a bit of that similar higher low to what we had in that of the euro currency. Right, that kind of little reset feeling. But now with that said, we've worked our way back inside this previous range, right, in the kind of form of a two-part wave. Initial impulse up, higher low, slightly higher high versus that of the EC. So as we come back down and roll over here, do have 2623.2 here. Just have that as a bit of a yellow zone. I have the caution area marked off there, just in case we were to come down and slip beneath that point. As well, we didn't spend a whole lot of time developing that area there in the gold. So if we grab our drawing tools, right, this is kind of more or less what we're working with here. This two-part wave, you see it a little bit cleaner in the oscillator, that green hump on the oscillator, our pullback, and then our secondary wave. So that A, B, C wave structure, if we would, highlighting a more complex correction on its lift up off the lows. And then again, this 23.2 will be a nice point of reference for us there in that of the GC, the gold. Alright, and then our crude and bonds into the mix here. Speaking of previous ranges, right? I have this blue box here to kind of indicate that one that we had built out there in the gold. We know that the crude is a work in progress with respect to its more range-bound structure. We know it's in that bracketing market mode where we're having a tough time getting too much follow through, right? Or back-to-back days of low to high or high to low. It's giving us more of that feeling of the one day up, one day down, one day up, etc. So with that of the crude, don't want to get ourselves too overly enthused or anything. We have the previous day's high that could be taken into account. Up above here, I have the 7102 marked off, which we would see is just above the previous day's high and is closer to the top of our previous range that we had built out for ourselves. So, this was the test of 71 even. This was the 7102. So, viewing that area up above as having two data points, but really outside of that, not necessarily a strong bias as of the moment there in the crude. They're maintaining their ground and holding, but not really moving away from the center of gravity or the center of the volume node all too much there. So we'll keep tabs on it, but as of the moment, not really giving us too much major indication as of yet. And you can always check up on the other products here, the unleaded gasoline, as well as the heating oil, just to make sure they don't have anything major going on as well. And as is the case, a little bit of a bit underneath the heating oil, but nothing major over the top. Alright, and then that brings us to our last two groups here, the fixed income groups and that of our digital coin there, the Bitcoin. Here with the bonds, main component here is the persistency of trend, or the extended run that we have taking place to the downside. Still with the lack of any 3-bar balance mode or wide range reversal, so we can carry forward 113.28 in the case of the 30s, right? Because that's the 5 SMA. If we keep it, above the previous day's low and all, we can try and form ourselves a little 3-bar breakout mode going into tomorrow's trading, or rather Monday. So that'll be an important one that would require us to stay below the previous day's high. Essentially staying inside the previous day's bar would form us that 3-bar balance mode with these 30 years. So not the case as of yet, but something that would be monitoring there as the day progresses on. 114.02 to 113.03, almost a full handle just in terms of yesterday's range with the bonds themselves. And then as well, I like viewing the yields as well. Basis the yields coming into the session at 4.793. We did do some partial gap filling there last week. Not a complete fill, however. That would have taken place at 4.681, so that point still remains looming there on the yields, but do like that visual as well, comparing that to the traditional bond futures. And then lastly here, the digital currency of the mix, the Bitcoin. As of the moment, we've been holding a slightly higher low, so pretty straightforward with this one here. We have 93,575 as a caution zone. That's one data point, and 2 data points down at that area. And in case we try and firm up at all, you have the 100K mark, but also the previous cycle high, which would be kind of more so that U-turn point. Since as of the moment we have not made a full retest down, that will be a overhead hurdle there for that of the Bitcoin. And with that said here, we're going to let our morning data get settled in here, get some charts adjusted, and we will see what we got lining up here for this Friday, lining up in front of us here.